will slow the growth of healthcare costs for our families, our businesses, and our government. There will be a provision in this plan that requires us to come forward with more spending cuts if the savings we promised don't materialize.
Well, that didn't age well.
Hi, I'm Jace with NeuBenefits Insurance Solutions. Healthcare costs have been growing at an alarming rate, and I have bad news. They are not slowing down. Surveys project that healthcare costs in the U.S. are likely to increase by as much as 12% in 2026. If you own a business, you're probably dreading this year's renewal letter. But here's the thing. You need to communicate to your employees that this isn't just your company. This is a nationwide trend impacting everyone. In this video, I'm going to arm you with the facts. I'll show you the top 6 factors driving these costs and the hidden systemic costs no one talks about. But stay tuned until the end, because I'm going to also share 4 specific strategies you can use right now to protect your bottom line without making your employees hate you. Let's dive in. Here's the top 6. Number 1, GLP-1 drugs. You know them by names like Ozempic or Mounjaro. The demand for these drugs for weight loss is exploding. Today, a whopping 12% of Americans have used them and 14% are interested. Prescriptions have tripled since 2020, and new versions are hitting the market by 2026. This is a massive new line item on insurance claims that simply didn't exist a decade ago. Number 2, specialty medications. It's not just weight loss drugs. Specialty drugs now make up nearly 80% of all new FDA approvals. These are incredible life-saving treatments for chronic and rare conditions, biologics and gene therapies, but they come with massive price tags that drive up premiums for the whole pool of insured. Number 3, chronic health conditions. Here is a staggering stat. Around 90% of U.S. healthcare spending is for people with chronic and mental health conditions. We're talking about heart disease, diabetes, and obesity. As the population gets sicker with multiple conditions, the cost to insure that population naturally climbs. Number 4, an aging population. Our workforce is getting older. Life expectancy is rising, projected to hit over 82 years by 2055. But at the same time, birth rates hit a record low in 2024. Fewer young, healthy people entering the pool to offset the cost of an older population means higher costs for everyone. Number 5, cancer care. For 4 years in a row, cancer care has been the #1 driver of employer cost increases. And it's not just older adults. We are seeing diagnoses rise among younger, working-age people. Modern treatments are effective, but they are intensive, long-term, and very expensive. Number 6, healthcare labor shortages. Simply put, we don't have enough healthcare workers. Between retiring doctors and burnout, the supply is low, but demand is high. When hospitals have to pay more to staff their floors, they pass those costs on to the insurance carriers who pass them on to you. So, what does this actually look like in dollars and cents? Well, chronic disease alone adds an estimated $6,000 to $8,000 a year to family premiums. But wait, there are 3 other major factors that have nothing to do with your employees' health and everything to do with the system itself. First, hospital consolidation. This is a bit technical, but important. Because of how the Affordable Care Act caps insurance profits as a percentage of healthcare spending, insurance companies are actually incentivized to let healthcare costs rise so their allowable profit margin is larger in absolute dollars. Plus, when insurers also own the hospitals, high costs double their benefit. The impact on you? An estimated $2,000 to $3,500 added to family premiums every year. Second, uncompensated care. When people, citizens or non-citizens, don't pay their hospital bills, the hospital doesn't just eat that loss, they pass it on to you, the insured. The impact? Another $1,500 to $2,000 a year. Third, insurance fraud. Public and private fraud is rampant. The impact? That's another $1,000 a year passed on to families. Now, those systemic issues can be addressed by government policy changes, and we will do a deep dive on that in a future video. But you have a business to run today. I promised you strategies to mitigate those costs while keeping your employees happy. Here are 4 moves to consider. Number 1, benchmark your cost sharing. You may need to increase the employee's contribution to the monthly premium. I know, no one wants to do that. But if you give us a call, we can benchmark your industry. You might find that even with a reduction in your contribution, you are still more competitive than your rivals. Number 2, optimize the base plan. Consider a less expensive, higher deductible base plan, but one that still offers reasonable copays for doctor visits and free telehealth. Combine this with a health savings account option. This allows employees to save pre-tax dollars for medical expenses. These dollars can also later be converted to a retirement account. This is a huge financial win for them long term. Number 3, free perks through an EAP. If you have to cut back on the medical plan, offset it with an employee assistance program. These are inexpensive, sometimes even free when packaged with other benefits, and offer 24/7 counseling, financial advice, prescription drug saving tools, and more. It helps your employees feel supported without breaking your bank. Finally, most employees are unaware of many of the perks offered by their insurance carrier. Inform employees of these valuable benefits. For example, aggressive discounts on gym memberships and weight loss programs, such as Jenny Craig and Weight Watchers, free access to premium mental health and wellness apps, discounts on massage therapy and acupuncture, even discounts to theme parks and travel. Knowledge and use of these programs can enhance employee satisfaction with their coverage. In conclusion, look, government reform moves slowly. You can't wait for Washington to fix your renewal rates. You need to shop smart now. At NeuBenefits, we don't just sell plans. We analyze the market to protect your bottom line. If you want a personalized analysis of how to save thousands while keeping your team healthy, give us a call today. Thanks for watching. If you found this helpful, please like and subscribe, and I'll see you in the next video. Please like and subscribe. Please like and subscribe.